All right, let's make sure we are live. Hello and welcome everyone to another episode with Mark Wood on the Financial Summit YouTube stream. I'm still here in Miami, hanging out with cute puppies who really wants to get off the couch and go eat. And Mark, how are you?
I'm doing great.
All right. Um, Let me just check my audio settings. Kind of rushed. The stream was a uh, when Matt McGregor couldn't make it, I try to get Mark on, so this way I'm not, flying solo on these shows. And hope you guys enjoyed the stream with Socrates yesterday. Mark, you watched the show. We're gonna comment on that. I would love to get your take. You use his MSR indicator as well. You use my MRI indicator. You use a bunch of stuff. Since I didn't do a show this morning, let's go to my charts real quick. I'm gonna try to do a lightning fast one. I'm gonna try not to interrupt you as often I interrupted Socrates. That really pisses off some people, apparently from the comments. Let me go to here.
It doesn't bother me at all.
I happen to have the Bitcoin ETF uh, stats up. We did buy 4,000 Bitcoin yesterday inside the ETFs. And you can see how October had started off. Now it's closer to break even. I think October is still gonna be a positive month. Uh, Keeps flirting with a lot of stuff. Let's go to the this is the weekly chart. The weekly chart is pulling back, but I keep saying time is on our side here, and we are now going into the middle of October. So there's only so much more downside left. I do think the low is likely in. I'm gonna be putting Mark on the spot on this stream to get like direct answers, yes or no. We'll see how that goes. On is the low in? Are you bullish? Are you bearish? But we also need to know the concerns in either direction. Everything was looking absolutely beautiful yesterday with the price of Bitcoin pushing above 64,000. The day ended up being a complete reversal with a reversal candle. We are still in a bullish MRI count. Earlier this morning, when we were trading above 63,000, everything was also looking completely rosy. Now, not so clear. This is the daily chart. I still think these lows of 59,000 are likely in. If we can make it past October without the 60,000 breaking to the downside, I mean, unless we're sitting here at like 61 at the end of October, as long as we are above 64,000 at the end of October, I'm going to assume 60,000 will not be cracked to the downside at that point. Every single day that goes by goes significantly into the favor of the bullish direction. As far as the MRI is concerned, personally, I would love to see the MRI completely reset, come with a red one, maybe even a red two without a red star, then reset into a green one, into a green two, delay this, and get a brand new green star candle around the 15th, the 16th of the month, taking us into, you know, a new MRI wave. The more this consolidates without going below 61,000, the more and more bullish I get. As far as the allocation goes, I would love to see another few candles of consolidation and then the breakout on a green star candle. So if next candle is going to be another red candle, because one, two, three, right. Next candle, another red candle. That's the 4-day candle of October 11th. The 4-day candle of October 15th would be the first green number. And then the candle of October 19th gives me a green star candle. Not that I care about the MRI all that much on this chart, but if we are breaking 65,000 the week of October 19th, that would probably, for the first time on this allocation chart, you will see me go more than 100% long. I have never done that. I have never taken on leverage trades in my retirement portfolio. If there was ever a case for a leverage trade on Bitcoin in a super confident environment, I would do it in early November on the break of 66,000. I would love to get Mark's take. We're not talking, 7x leverage on your retirement account. We are talking, say, 1.5x leverage, maybe 2x leverage on your portfolio, because I need to make up for the whipsaws and the ups and downs that we had for now 7 months. We are approaching the longest indecisive consolidated stretch Bitcoin ever had. And if this continues into November, imagine if it continues into mid-November, imagine if it continues into early December. The more this consolidates, the longer it takes for us to break 66,000 without breaking 55,000, the more confident I get and the more leverage I'm willing to put on. This is probably my biggest question for Mark and his opinion on that. So let me stop there and see what Mark thinks about this.
Okay, so is the chart you have up right now the consensus moving averages?
Correct. This is the 4-day candles with the 3, the 9, and the 30. And you can see that the 30 will finally tick to
Yeah.
the upside for the first time since mid-June if the price does not move for the next 3 candles. But if the price is sitting higher 2 candles from now, then this dot might actually turn.
So zoom out to the last time those moving averages cross, and I'm going to make a bet that it was right at the end of the consolidation. Right there. Yeah. So no, zoom out farther to where the blue was below the orange. There you go.
Right. So we are starting to
So
look like this, but it's even better than this. The reason why it's even better than this is because um the right here I was late. I was late because it moved up too high, too fast, and it moved up on um I'm not going to say it was fake news, but it was this was an article in Cointelegraph that the ETFs have been approved, and there was no evidence for them to say that.
right, I remember that perfectly.
Right. So this was a very, very tough situation. First of all, it was coming off an MRI top. Second of all, it happened on news that had no business being in the news cycle because, I mean, it turned out to be right, but that's like a blind squirrel guessing. It turned out to be correct. And it went up so fast, it wasn't set up for the cross. We are dealing with a way more predictable situation here.
So so that cross is looking inevitable. I mean, I'm it's going to happen. Okay. So Tone, there's a way on the general settings to allow us to see the price range where those moving averages are crossing. If you right click just in the white in the general part of the chart and go to settings, um, go to maybe status line. It might take me open market status last day. There's one that's going to say show values.
Oh, yeah. No, that's yeah. I know what you mean.
Maybe scroll down there. Um, we can find it. We can find it later, but it's helpful. It's helpful to take a glance. Yeah, I don't know where it is. There it is. That might be it.
On the right side, you mean over here, right?
Yeah, it should show up on the right
Oh,
side.
you want to see? Oh, okay. You want to see the values of the moving averages?
Yeah.
Oh, I gotta click on the moving average, and I gotta do it in there, visibility, somewhere or style.
labels on price scale. Yeah, it should show up there. That's weird. So what
Yeah, no, I turned that off because it tends to clutter my charts.
it can
But I know what you mean. It's like moving averages up here on the right. No, this is a custom-made moving average. It may not have that.
okay, so so where does the price range where those moving averages are going to cross?
One second. Uh, I mean, it's gonna cross at 61. It's gonna cross uh next candle we're crossing no matter what. Like the 9 is gonna cross above the 30, but the 30 is still a decline for another two candles.
Yes, that is going to cross. So that kind of gives us a very clear dividing line. Now it's perfectly fine if we see one or two like after the cross, it's going to be hard to undo that cross once it happens. So once 61 and a half can firmly be established as support, I think it's going to be quite bullish. But there's still a possibility for the price to whip below that one or two more times. I don't have a strong opinion on that right now, but where those moving averages are crossing, I have a very looking at several different things. I'm just kind of looking at the price range between around 61 and a half. Let's just say 60 to 62K. Let's just make it a broader range as being really important to establish a support. But yes, if when you zoomed back out, I knew it was going to be during that October end of that October consolidation of 2023, and that was a signal that helped get the price moving again, along with the fake news that got released. So now, are the lows in? You asked me that question. I'm going to say yes, but I'm not going to say hell yeah, because
Okay, well let's be specific. Let's go with, is the 53 low in? Yes or hell yes?
um,
Because on this one, I am saying hell yes.
I would
On
be
this one, I'm gonna go with just yes.
okay. I'm gonna cheat a little bit on 53K. I'm gonna say hell yeah ish with the ish in parentheses, and then
Okay, let's do confidence levels, right? I mean, confidence levels is always better, right? So, the I mean, I hate the way this double bottomed. I really, really hate it. But the probability that we are not getting a close on the daily below 55, for me, I am 95% certain we're not closing a daily candle below 55.
okay, I'm not that certain. But you know what? We can take a look at something. I think it's a really easy, clean look at
Well,
something.
well, no, no, give me a number. Give me a number. I'm 95. Where are you?
I'm at 80%. I'm at 80%.
80. Okay. Now, what about this one here? We have a daily close at 60,500. I am at about 60%. We're not closing a daily candle below 6,500, which is probably pretty damn high. But it's about 50%. That means I do not expect us to go lower than 60,500.
I'm at 51%.
61.
51.
51. Okay, you're slightly above break even. Okay.
Slightly more bearish than you and Socrates. But you know what? It's really based only on one thing that I've been monitoring, and there are so many other bullish things. So the skepticism. The problem is the one thing that I've been looking at has such a high hit rate throughout history that it's a little bit concerning. And we can talk about that. I can show the people exactly what I'm looking at. But so right where so let me share my screen real quick. And your moving averages are crossing right around the 61 and a half K. And I'll show something that I'm watching on my chart, which kind of agrees with you. So this is the 12-hour chart that I have. And now if you notice, I've got it zoomed out, going all the way back to the same area where the Consensio moving averages were crossing, right before that massive bump up on the news that Tone was talking about. That took place around October 20th, 20, between the 20th and the 25th in that week. But this is what I'm looking at right now. So when I zoom into this area, I've got three moving averages. Okay, I've got the 55, which is green. I've got the 200 EMA, and I've got the 21 EMA. So the 55 or 50, it could be a 50, doesn't matter. I just like the Fibonacci numbers. And the 55 crossed after this long consolidation. That's a golden cross, okay? And then what we look for in order to trust the cross is for the yellow 21 to become trusted support, okay? So now, what happened right back here in June of 2023 was very bullish at the time. When I'm seeing a potential death cross, because now let me get rid of the 21 EMA just to show it more clear what I'm looking at. So when you're watching the green drop and the price drop below the 200 severely, now I would imagine if I put on the RSI, I'm going to guess that there's divergence right here. Let's just take a look and see. And I've been having issues with my mouse today. Connection lost. Oh. I need help. Okay, connected. So let's turn on the RSI. And yes, there was definitely, I'm looking, where the heck was I? Oh, right here. Okay. I'm looking in this area right here. Here's that initial low, and which was taking place at $26,000 on May 12th. Sideways consolidation, a lower low and another lower low. However, there was a higher low on RSI. So now you've got some bullish divergence and this death cross. So with the price sitting so far below the area of the cross with divergence, okay, there's a high probability that this potential death cross is going to get tested, which is exactly what we saw. And now this is what I call bouncing off the moving average. When I see two moving averages bouncing off of each other, I consider it to be very, very bullish. And so let's see. At this period, the price was about 6% below the area of the cross. That's not extreme. When it's like 10% or more, there's an even higher probability that we're going to see a strong bounce. But this is beside the point. What we are seeing right now, then we have the golden cross. So this is the point I'm trying to get to. We just had a golden cross. Okay. Now, this was failed. And this is the whipping around that Tone has been talking about. Okay. Trading this on low time frames and high time frames has not been easy. I would imagine a lot of people have lost a lot of money trying to make bets on this because we've gotten some really strong signals that have failed and some fake outs. But
in my view, this has been a nightmare to trade. If anyone was able to navigate the last 7 months and constantly profit, hat off to them. I know Matt McGregor has done pretty well overall. I know he's had a few losing trades, but he's done okay. But for me, that's a nightmare to trade based on how I trade.
So, and I have not traded it. All I have been doing is catching knives in a very strategic way, hoping with the hopium that I'm not going to have to buy lower again below 52K, and eventually we'll be able to start selling at higher prices. But here's the key point. A recovery out of lows cannot happen until you have a golden cross on the 12-hour, period. Okay? It's not going to happen. So this was some hopium right here. We have the golden cross. But remember, when I put the 21 EMA back on, that has to become support. And as we can see, this was a textbook perfect test of the golden cross. And you're going to buy that. Okay, if you're a short-term trader or maybe a swing trader, you're going to consider buying this. And you would have gotten a nice pop because this was a move from 63.5K up to $70,000. Okay, that would have been a nice trade. This is very low risk once you've got the cross. It's very likely to hold on the first pass, but look what happened right around July 29th. 1, 2, 3 closes below, 4 closes below, testing up. Now the yellow is confirmed resistance, and the price capitulated back below it, creating the death cross. So we have hopium. We have hopium right now because we have a golden cross. It has been tested, right? So maybe, if you bought this 61.4, maybe you got stopped out right here, depending on how much tolerance you had. But I do believe buying around the 200 EMA when there's an early golden cross is worth the risk. So now what I'm looking for on this particular time frame is for this 21 EMA, which is sitting at 62.5K, to become support so that it can begin to trend up and pull the green farther away. Right now, they are sitting very, very close. And when we were looking at Tone's Consensio, I believe it was right at around 61.5 where those moving averages were crossing, which is right where the 200 EMA is on the 12 hour. So if I start seeing 12 hours close below this, I'm going to consider this to be another potential failed golden cross, and might start looking back down to these lows. And on the daily chart, well, let me go to the 4-hour chart because we got across on the 4-hour chart. This is also interesting as well. So on the 4-hour chart, in order to have a recovery out of a low, this is another crucial cross that has to happen. You are not going to see a low confirmed until this cross is in place. And this is the 21 EMA crossing above the 55 EMA, okay? I would consider this a golden cross because it's on a lower time frame, but they're higher moving averages. For the most part, the 12 hour 55 200, I put more weight on. But I was watching this very closely, and this is very typical. Let's take a look at what happened back out of these lows off of 52.5K, where we get the move above the 55 and we finally get the yellow 21 crossing above. Okay, that was tested and it was holding. That was fine. And now look, this is what happens. There's always, almost always going to be an effort to dismantle this cross. Sellers if they have a bearish bias, they are going, whatever this 50 period moving average is priced at, they are going to try as hard as they can to push the price below that and keep their shorts profitable. And so what we saw today is not surprising at all to me. I was watching very closely to see if this cross was going to happen, and we had this one gigantic, powerful red candle that just obliterated this cross. And now, look where the good luck trading this. Okay, this has swung up to 63.1 and down to 62.1, $1,000 swing in 1 4-hour period. But when I zoom in, the price is stuck right between these moving averages. This is a battle between a bullish and a bearish bias. So what I would be looking for is 4-hour closes above 62.6, enough to pull the yellow up and possibly keep the 12-hour golden cross intact and keep the 21.55 intact. All right. Opinions on that idea, Tone?
I got no comment on that other than I don't expect anything today. Uh, we got the CPI numbers coming out on Thursday. I think the markets are just gonna wait for those numbers.
Yeah, I think that you're right. So on the daily, this is another. Let me zoom back out to that October consolidation. So this is right here. Another. I also look for this same cross on the daily. It is. Let me zoom in. It is once again the yellow 21 EMA crossing above the 55. I consider that a golden cross as well on the daily. Probably put as much weight on this cross as I do the 12-hour golden cross between the 50 and the 200. So we can see coming out of these lows in the 25K range on October 7th, we got the cross. But once again, this is a cross that sellers and shorters are going to try to dismantle. I have watched it hundreds and hundreds of times. It is so predictable. And so you want to, if you're trying to trade this, you're going to try to catch these lows and maybe give yourself a little bit of room below. Of course, there are other things you can watch. There's support on other time frames. There's MRI, but as you can see here, the price did get pushed back down, and this cross was almost dismantled. However, it held, and then we had that massive pull up that Tone was talking about. So now on the daily chart, what I look for is for the 8 EMA to become support after this cross, which we got perfectly, and then test. So as long as either the 8 or the 21 are holding after this cross on the daily, we're going to see exactly what happened here. We're going to see the price continue to climb. So let's put that into today's terms. What are we looking for? Well, we have the cross. The 8 was holding. It has failed, and now there's a battle to determine whether or not. And once again, here's another look on a completely different time frame at 61.5K. Okay, so we've had 3 looks at 61.5K, showing us, giving us some confluence in the importance of establishing this price range on, let's say, 4-hour to 12-hour to daily closes as support. So what I do not want to see is for the orange moving average to cross back down below the yellow and then to have the price push down. I would begin to consider this a failed swing and would have to start looking at these lows at 60K and possibly this low that Tone feels 65% sure are going to stay in.
Hey, Mark, can you throw a Fibonacci from the September low to the September high?
Yeah, I got a bunch of crap on there. So this dropped down to just below the 382.
Yeah, 382 is my favorite pullback. I like it.
Yeah, it's a good pullback. Well, the structure is set. The structure is completely set to maybe consolidate a little bit longer and establish a little bit higher level of support and try one more time to take out this swing high around 66K. These.
Yeah, remember the longer it takes for us to take out that high without taking out the low, the more bullish I get and the more confident I am in a leverage trade.
Okay, so let me show you my one main concern. Okay, and I'm going to use the 7-day because it's going to give us a signal a little bit quicker than weekly, but it's basically the weekly. So now I'm going to go to my EMA, SMA.
Those are the 55s?
Yeah, these are both 55s. The lighter green is the 55 EMA, which has been holding nicely above the SMA. But when I zoom in, I'm pretty sure this cross is going to happen because the green SMA is going to continue on this trajectory. And even if this reacts a little bit, the EMA reacts, I still think the green is going to cross. There's 5 days left in this candle. So we're going to check back in with this next week. Now, here's why I'm concerned. Because there are not too many examples of this cross. However, only one in history has produced a higher high. And we'll talk about that. We'll show where it is. But let's highlight where these crosses have taken place. July 23rd, 2014, coming off the 1200, macro top, and this cross pulled the price down into it, flipped it to resistance, and we went to the bear market. Second one took place after the 20K top with the 55 EMA just flattening out and eventually crossing below. And then once this was an important week right here. This was the week of July 23rd in 2018. Once that 55 SMA was confirmed resistance with the EMA below it, we can see what happened. Now the EMA is resistance, okay? And then that capitulated in the bear market. Here's the third cross that took place. This cross happened because this was bullish out of the 3K bear market. However, basically the price went from $5,000 to $15,000. Let's just call it $14,000. Almost tripled way too quickly. And that allowed the EMA to pull up, but we had a lower high. We tried to establish one swing higher high, but it was not enough momentum. The EMA was running right into what we're looking at now, and we had the COVID crash. Okay, so that's the other cross. Here is the one example where we had the cross and still saw a higher high. And I'm going to show you the TA that I'm looking at in order to keep myself from getting too bearish. The 21 EMA held the price. Okay, so even though we got the bearish cross with the 55 EMA, the 21 held closes. This is on the 7-day chart. And this is the only time in history where there was one higher high and it actually created a new all-time high. I think this is possible, okay? This is what's keeping me from getting mega bearish, because I don't think we're at the end of the bull market. I kind of agree with Socrates. I heard him talking about the possibility of elections impacting price in a negative manner, creating some kind of panic and fear. There is a little bit of technical setup to make an argument for that. However, I don't think that is my base case. But let's take a look at this scenario and apply it to what's happening right now to see what has to happen. So once again, $61,500. So this is the fourth look with using completely different moving averages and time frames. And this is what I love about TA, is like I have a high level of confidence now that $61,500 has to become support on fairly high time frames, like let's call it daily and 12-hour. And if these moving averages cross and 61.5 is lost, I do not think, well, first of all, I'm going to put a 70% chance, Tone, 70% chance that the price is going to get pulled below 54K under the conditions that the cross is confirmed and 61.5 has been flipped to resistance. Those are the two conditions. If the price swings below 61.5K, I don't care. If there's one or two candles closing below it, I don't care. But if it becomes clear, like let's say 3 or 4 weeks closing below there, I don't think this is going to hold. So that is my one bearish argument outside of this overall bullish structure. What do you think about that, Tone?
I'm a lot more bullish than you. I am not scared of this cross at all. I think this is such a different environment than what we were dealing with in 2021. And the biggest one is in 2021, yes, the gap between the two tops was about the same, right? The first one came in April, the second one came in November. Now, this time around, the original all-time high came in like late February, early March. And right now, we are going into mid-October.
Yeah.
The main difference is, look how exhausted and how far the price had to go to break that all-time high back in November of 21. And this time around, once the all-time high is being broken, this time around, I
Yeah.
think the move is just going to get started, not exhausted. So I
Totally
have
agree.
very little. I mean, I was confident that last time we were gonna go higher on when if you put your cursor on November when we broke to new highs. Nope, nope, nope. Last time, 21.
Yeah.
Right. See, I was confident we were gonna go higher, but my confidence was subdued compared to my peers. Right. I was like calling for 80,000, and then when other people, I'm not gonna name names, were confident at 300,000. I kind of upped my thing. Well, maybe he can go to 110, 120, right? I was still significantly below most analysts. It's just that I was probably more confident than the average, the average skeptic. I was very confident that we're going to 80. Like I never considered the possibility that we're only going to break the all-time high by 0.002%, right? Like that's the part that kind of screwed me. But I didn't have lofty expectations. I wasn't expecting 300K. I wasn't even expecting 200K. I wasn't even expecting 150, right? This time around is different. This time around, I am expecting 150, 200, 300, right? Because I think once we break 75, that's the beginning. That's not like towards the end of the run. It's just getting started. So even if those moving averages cross, they ain't gonna stay crossed for very long because once we break above, with the halving cycle, with the ETFs, with the place we're in, and we're not rallying to 65K from 3K, right? And more time has passed. I mean, yes, we did rally from 15,000 to 65,000, but we've now consolidated for a lot longer. For me, there's I'm not worried. I'm really not worried. I just want to time my leverage trade so perfectly that I don't even spend an hour in the red.
So, Tone brought up a point on the last stream that that when we do when we have a like let's look like from March, early March until now, okay, October. Basically, the price hasn't done anything. Like here's early March, here's late February. It was at $63,100. Today, the price is at $62,600. So we basically can eliminate all of this and just say the price has been sideways for months on end. What that does to moving averages is it does whip them around. And Tone is right. Like you kind of have to have other strategies. Like this is my main thing. I love moving averages. I can see the patterns. I believe the moving averages tell us the future. They're not lagging. They tell us what's going to happen if you know how to read them and if you know how they interact with each other. So I'm going to show you this, Tone. I'm going to put on one more moving average, and it will kind of be my last line of defense if we get this cross. Okay.
Yeah, and Mark, we should move on to some stocks. I know people are like screaming about Nvidia, so let's wrap up the Bitcoin talk.
So right here, this is basically this. Let's just assume we're going to get this cross. Let's just assume it's going to happen. Um, this this EMA, this is the 34, which is the next highest one after the 21, is kind of the last line of defense. And if we go back to this top, or we go back to any time in history, I can show every single time. As soon as this moving average was lost, or flip to resistance, or let's just make it easy and say when the yellow 21 became resistance with the cross in place, that's when the price got pulled down into it. So those are the conditions that have to be in place. In order for me to get bearish, I am not bearish. Let me make myself clear. I am not bearish. I am just cautious because I know what this is going to try to do with the price once a level of support is lost. So if we begin to see closes below $59,000 and then a bounce up to the yellow that rejects it, now I will be close to 100% convinced that the price is going to test 54, 55K. But those conditions are not in place, okay? I am just showing up a warning. This is probably going to take a week or two to have a little bit more confidence or conviction in what is going on here. So that is what I'm looking at, Tone. And the other thing that happened back here before we go on is we had this top at 65K, and then several months later we had a top at 69K. And if you turn on the RSI, massive bearish divergence, right? Here's the top right there at the 65K top area, with the RSI already having topped, but sitting at around 80. And then at the secondary top at 69K, the RSI was just barely peaking into 70. Now it was in a bullish zone, so we should have been bullish. Like, I was with Tone. I was very, very bullish during that period. But on a high time frame like 7-day, when you have bearish divergence like that, once you start confirming this is a top, it is really going to dig in. So we do not have such extreme conditions right now. Well, we actually kind of do, if I'm being honest. We have the RSI spiking at 88 on this 74K top, and now sitting down in the 53K range. So
yeah, but Mark, this I think this is great, right? This literally allows the price of Bitcoin
yes,
to go to 100K
yes,
and still give you RSI divergence at 100K.
totally agree, Tone. And look, this is the Fisher indicator. This is similar to what Socrates looks at with his EMA or EXA. Once this crosses above the zero line, like, we can take a look what happened back here after the October consolidation, right here. Once it pushed above the zero line, which it is trying very hard to do, and we might get confirmation of that on this next close, that is when we really began to see momentum to the upside. So
Right. And also with the RSI divergence, if you go back to what happened in 2021,
yes,
this is also another reason why I was looking for 80,000, like 82 to 84,000 were my targets. In that, had we made it to 84,000 over the following month or so, we still would have gotten RSI divergence, right? So this is the thing, like that, and this is why I think we're gonna have a nice fat top around 90,000, uh, hopefully early next year, and we're gonna pull back to 70, resolve the RSI divergence, and then make a push for quarter mil.
so I know you want to move on, but Socrates talked about this yesterday, and I was watching the exact same thing. This might show a little bit clearly because I've isolated the RSI. This is on the weekly chart. Well, let me just put it on weekly. It's a 7-day. It's the same. Okay. Another thing that I look at of digging out of massive bear markets, or at least extended downtrends, is a break. The RSI is almost always going to create a trend line like this. And when you get 1, 2, 3 touches, 4 touches, that's perfect. So this was right here, once again, the period of October 2023, where we're seeing a lot of similarities. We are having the same break of the trend line in September into October. And here's one thing that I find interesting. So I've got a moving average on the RSI. If you look, there was one more rejection after finally picking up a close or two above the RSI. one more rejection, which we are getting right now. We had that break and close above the RSI, but now the weekly chart, the weekly price action is pushing it that back below. What I will be looking for with the RSI is to get this RSI closed back above, breaking out of this, and it's mega bullish.
Hey, Marco, go back.
Mega bullish, especially
I'm
with,
not a big fan of drawing like certain trend lines, but can you draw one more trend line for me?
yeah. And if
Can you
you
grab a
have,
line?
where do you want it?
I'll tell you, grab a line. Put it on the January 2024 low.
Here,
Connect it to the May low. May. And keep going.
like this.
Yeah, keep going. Keep going. There you go. I was hoping it would connect a little bit better with the July August top. Where yeah, there, yeah. And now once that one breaks, I think it'll be nice.
Totally agree. And you know, Tone, the thing, so I actually love patterns on oscillators like RSI. The problem is they're never going to give us trend lines as clear as the price will with candles. So I allow for a little bit of wiggle room, like this bumping.
In fact, can you play around with that trend line a little bit? Can you connect that one all the way to the top of the April of 23?
That, let's see, that will change the angle a little bit. That would kind of bring it.
Right. Now, if you use a lower time frame, if you flip this to say daily, you're on weekly, right?
So flip it to daily. What, Tone, I like this one right here. I like this because this is going to show us that once the weekly is above the EMA and breaks, let's just call it 55, 56, 57, that is, the weekly is going to be set up to be very, very bullish, especially if the Fisher is clearly green and above the zero line, right? But we can see that there is you will find support and resistance on RSI. That's why I have this trend line drawn right here. Okay, this was the low. This was the low in September 2023, and if this had been broken right here, I was going to be looking for the price to drop well below 50K. This was a really important level of support in September. So this is I basically I do agree with Socrates. I like the break of this. I like the break of this trend line, and we just need to get out of this sideways mess to get some momentum to the upside. All right. So you want to take a look at Nvidia?
Yeah. Nvidia, and then well, Nvidia is the S&P basically. So
I mean, what's not to like about that?
no, it's even better when you put the MRI on.
Green star. So check this out. The green star, I can see one. I can add a horizontal ray like right here. Whew. Right. So first of all, your moving averages are spread out perfectly. I'm on the weekly chart. This is the weekly chart. Moving averages are spread out perfectly. You're getting the price. This is basically an awkward inverted head and shoulders pattern, which I could kind of put a target of around $190. Would you agree with that, Tone? Once this
Yeah.
breaks out?
Yeah.
Yeah. I mean, it is battling resistance, but I would be long Nvidia.
It's breaking down resistance. I wouldn't say battling.
It's breaking down resistance. What I'm saying, it's pushing into the resistance right
It's
now.
not a very even. It's not an even. It's not a very even. It's not a very even battle. The price is definitely winning.
the price is winning. Yes. And one thing I'm looking at, I'm curious to see what this looks like on a different time frame, like 3 day.
I go to monthly.
Okay, we can look at monthly. I was just going to talk about this particular pattern. So now that changes the horizontal a little bit, but it actually almost makes it cleaner. Now,
It does make it cleaner.
yeah, now on the 3 day, um, this closes in a day.
I think the monthly is going to be cleaner. I think the monthly is going to be the cleanest one. Well, I'm just guessing, but
Oh, check this out. Right here. Here's our cross. Here's our bearish cross. And here's the test of it right there. Right? So this is my point. This cross acts as a magnet, and the Bitcoin is going to be pulled in this direction, and it is going to be up to the bulls to defend this moving average. This is the exact moving average I was showing on Bitcoin, the 34 EMA. And that, in essence, held because we only had two closes below it after the cross. So now I'm not concerned about this cross. This is exactly how I would feel with Bitcoin. If I was seeing the cross in place and the yellow 21, look at the support. 1, 2, 3, 4 bounces off of yellow, and now bullish. Okay, this is literally what we want to see out of Bitcoin in the next 3, 4, 5, 6 weeks into the end of October and November. But let's look at the monthly. What I was going to say though is, so it's not pretty on the 3 day. I still see this as an inverted head and shoulder, but what I wouldn't like is this push down. When I see the right side get pushed to a lower low than the left side was, usually that's bearish. And of course, it makes sense to me technically because of this cross. But then, like I said, once the support is picked up, it's go time. So that looks strong. We've got the monthly is on a green star.
right. So the monthly, like I said, it's going to look the cleanest, right? I know the month is only 10 days in and anything can happen. I want another 10 days to go by. So we're on the back end of the candle from a time perspective. But you can move that red resistance line all the way down to the prior candle's high. Right. And now, nope, even lower. Remember, the Tovey's rule of trend lines, don't break the bodies. And now this candle kicks off the month, breaking the trend line.
What you're saying, though, is well, it's looking likely. There's 23 days. It's still early in the month, but there's 23 days left in this monthly candle on a green star. If it closes on a new high on a green star, you're bullish.
Oh, yeah, it's a monster. It reminds me of what happened in January of this year.
Mm-hmm.
It's actually the same thing.
There's January right there. Yeah, it is. It's very similar. Like I could draw the same horizontal.
It's the same thing. It's taking place after a 1 to 4 candle correction following an MRI top. It's no different. It's literally the January situation repeating here in October. And the only month that is almost as bullish as October is January.
Yes. Yes. That is that. I mean, I'm bullish. There's nothing to look at this that has you any concern except for maybe taking out the swing high of this shooting star right here. That's at around $140. But now here's one thing, Tone. This is crazy. I've had this Fibonacci on here. This is the connecting the 2021 high down to the 2022 low.
Yeah, isn't it awesome how it went from an MRI top to an MRI bottom and it took a year to get there?
And then the green star that came after that MRI bottom. Well, if you had bought this, you were golden. Like maybe.
Yeah, no, you buy the MRI monthly and then you double or triple down on the green star.
Yeah. So is that where you would consider? So would you leverage on the low risk entry?
No, absolutely not. I'm leveraging on the green star.
Star.
No, there's no way I'm leveraging on the MRI buy. The MRI buy I'm just buying because leveraging on a falling knife catch is as dangerous of a trade as it gets. If I'm leveraging off the green star that follows an MRI buy.
Got you. So I'd be curious to open up MSR October 3rd. I'm going to write this down. October 3rd, 2022. Just I want to take a look at that. But real quick, I just wanted to show that Nvidia has trended above like basically it's trending into the 5.618 extension, which is absolutely insane to see that. Like I think Bitcoin would have to be above $250,000. Let's see where that extension takes it. This is going back to the bear market low. So it would be, so what Nvidia is doing.
Oh wait, Mark, I have to slightly disagree with your Fibonacci. Go back to the low.
The low? Oh.
Yeah. So yeah, if you're gonna have the one line on the wick, you gotta have the zero on the wick. You can't do they gotta be. Oh, okay, you have it there. Never mind. You have it on the body. Okay. I saw the thick black line and I thought that was the one. But it's not. That's just the trend line.
I just want to show like what Nvidia is
Oh
doing.
no, you're good. You're good. I thought you had a mismatch. You're good.
So Bitcoin would have to be trending above $210,000
Right.
to be making a similar move of what we're seeing in Nvidia. It's like one of maybe outside of one or two random stocks that have actually outpaced Bitcoin for an extended period of time.
Yeah, okay, so can I make an argument for the defense of Bitcoin in this case?
Go ahead.
Nvidia split, and it feels like it's a cheap stock now, right? Bitcoin doesn't split.
Right.
Now, had Nvidia never split, I don't think it would be up this high, right? So I think there's unit bias involved there.
No, that is a good point. And it Bitcoin sounds expensive at $60,000 for sure. And so now let me ask you something. When a stock splits like that, do you think like the news of the stock split, do you think that it encourages people to buy?
No, it does not. Not the day of. It's the memory of a fish situation, right? A few months after the split, people forget that Nvidia used to be $1,000 stock. All they remember is that it's a cheap $100 stock a few months later.
Uh-huh. Okay. Oh wow. Look at that. Okay, so you kind of have to understand MSR.
Yeah, you understand it better than me. So
Okay.
this
Now
I've never seen that before, by the way.
well, Socrates uses it mostly on the 4 hour. I use it on every damn time frame.
No, I'm just saying, well, whatever happened in like October of 22,
This, so
I've
this,
never seen this. Like I've never seen it look like that.
that's why I wanted to open this up. I would have bought the shit out of this. You said you wouldn't catch a knife on it on a.
I was catching a knife. It was an MRI buy. I mean, I don't remember keep paying attention to it like that, but I'm catching a knife only because of the monthly MRI, and I'm curious if well, I have it on my end. I'm not on screen share. I want to see if there was a weekly MRI inside the monthly MRI.
I got the MRI right here. It was a I don't know if I have the count.
It looks like there was a weekly MRI inside a monthly MRI.
I don't know why the
Yep, right there, green arrow.
green.
Perfect. Yeah. Yeah,
So,
dude, I'm all over that trade. I have a weekly MRI buy candle inside a monthly MRI buy candle, and now I'm tempted to go look at the daily.
okay, so now, but let's talk about so I did. Let me just say, let me just say something about MSR. I know I heard Socrates say that he's offering like a 3-month trial period. I would try it, and I would watch his tutorial on it. Okay.
I think there should be a link in the video description of this video for his indicator.
I think so. And I really, like Tone's MRI, that is something that we all rely on, and I've grown to rely on that. And MSR, it might be the second most inclusive single indicator that I've ever looked at, and I've tweaked it myself. I've learned how to like use it to my advantage a little bit more. I add moving averages that give me higher probabilities of moves like this taking place. But what I want to discuss right now is what I'm looking at on that low in Nvidia, because I had a feeling there was going to be something on this chart, on this indicator, that was going to show us this. So back in November 2002. Okay, we got this flip. You can see that the gray is on the bottom. The price pushed.
That's 2015.
I'm sorry, 2015. Early November 2015. Okay, so after this,
it's before I had my own YouTube channel.
So this is just Nvidia doing what Bitcoin was doing. Nothing. It was basically sideways. Like here it is in 2008 at 52 cents, and here it is in 2015 at 62 cents. But once it started breaking above that, these swing highs going back several years, that's when we got the flip of the bullish trend. So now what this indicator shows you is that on the time frame, we've just flipped into a brand new cycle of bullishness that could last for several years, which so far that's what we're seeing. So this flipped bullish on the weekly time frame in 2015, and here we are almost 10 years later. But what happened was a reset. So when the price is when MSR is in a bullish trend, which it is, this dotted line that sits in the blue, this is the ocean, this is called the buoy, that becomes one of the lowest risk areas to buy. In fact, it is the lowest risk area to buy. And this would have been such an easy buy because you could put a stop loss 2% below that buy or less and have almost no risk buying that, because if it would have dropped below $10.92, it was going to plummet. It was going to revisit all these lows. And then what happens is once that level of support is tested, it actually made the time frame neutral. We call this neutral, but it flipped. It gave us a new level of support with this green dotted line that's called the marker. And what you want to see at that point is for the marker to hold. Otherwise, you want to exit any longs that you're in because the price is going to plummet down. And then once it began to trend basically back above this prior all-time high of 33, that's when the time frame got bullish again. So now we're looking at the beginning of a second bullish run on Nvidia, right? So now this has me even more bullish for the long term because we're in a fresh weekly bullish trend on Nvidia. And you can use the cloud, you can use the sky similar to how I use the Bollinger Bands. Once the price starts closing weeks inside of the bottom of the gray, this is the sky area. If I get 2, 3, 4 closes inside of there, then this is the next level to look at. So we basically have gotten 1, 2 closes inside of the gray, which is making me start to look at $150, which would be a new all-time high. And here's an example of it right here. 1 close, 2 close, 3 closes, tested there, and actually went to the top. Now, the top of the sky, and this acts like moving averages, okay? So the moon in the middle of the sky is going to continue to trend up with the price. So this is going to continue to climb. But if we get a blast up to $170, that's a sell zone right there. because now you're talking about the probability of the price going outside of this as being very low. Socrates probably would know what the actual probabilities are, but I would take a venture to guess it's way less than 5%. Like here was one close above. I would be bullish, and that would be a signal to me that there is going to be a higher high, which there was, but that was a bit of a bull trap right there. Okay, so let's just take a look at Nvidia on the 4 hour and see what it looks like. Okay, so now here are two examples. Here are two examples of what I just stated on the weekly. This is a fresh bullish trend on the 4 hour chart. Okay, so you can set a buy here. Now, Socrates, he uses like he wants conditions. You can't just do this blindly. You kind of have to look at oscillators. You have to look for RSI exhaustion or some other or a moving average support or something. However, I could almost argue that you can basically blindly buy this at $92 without even having to look at any other thing. Anywhere between $96 and $92 is a buy, a low risk buy, and you can have a very, very tight stop loss, which this got a move of 45%. Okay. That's a massive trade just starting to sell off right in the sell zone, which the indicator. And then there was another reversal right back to the low risk buy zone, which you would actually, if you were just swing trading, looking at this to be a longer trade. Let's see, you would be up currently 30% without any worries. Okay, this gets a little bit worrisome because it's sideways, but you're profitable. And if you have a longer term mindset, which when Socrates is using the 4 hour on Bitcoin, I don't think he's looking to trade in and out of it in a day's time. I think he's looking at those trades to hopefully last weeks, if not a couple of months, because the 4 hour time frame on Bitcoin is going to be something more similar to like at least what daily on a stock. But as you can see, there are many reasons that I love this indicator, and I add my trusted moving averages. So here, I'll show you how the moving averages that I use work. Right here, these are the 50. This is the 50 EMA. When I get the short-term 8 crossing below it, there is a very, very high probability, very high, that the price is going to get pushed down to here, to the top of the beach at the minimum. And now, as far as analyzing goes, it's easy. As far as trading goes, it's hard, because if you decided to short this cross, like let's say you shorted this bounce, well, right here is where you could get whipped out of that trade, even though your idea was right and the technical analysis was right. And this is something that's very, very difficult about trading, is figuring out how much risk you want to take when the move goes against you, because ultimately that was the right move. Now, maybe you had the patience to wait for this swing. That would have been super lucky. But the idea is when I add the moving averages, it adds greater probabilities to what I'm looking for with moves playing out. So what I'm looking at right now, this is the 4 hour chart still. The moving averages are all spread out in a completely bullish fan. There's one more moving average, that would be the 3 that I don't think I have on here. I'm sure that it's the 3 EMA or maybe the 5 EMA that's walking the price up here. Now it's in a little bit of a take profit zone. If you're trading shorter terms. Okay, what else want to look out, Tone?
Oh, real quick. So someone is asking, do we expect Nvidia to run out of steam? I don't. I think this move just gets started. I mean, on a daily time frame, sure, it can pull back. It can even give you a daily MRI buy. It could go down for a week or two, but I just don't see how Nvidia is not going to double in price over the next, say, year and a half to 2 years.
Well, and what's crazy, Tone, is here is my my potential prospective hyperwave outline, and this is on the linear chart connecting the weekly low trend lines as per Tyler Jenks's system. And well, I don't even know what to make of this. Like the purple phase 4 should be the advanced part of the move, and I added a 4.5. I added another section. Let me get this back on weekly. I added another section. So now the price after, so here, this trend line has never seen more than one close below it. Okay, 2 or 3 closes below it, and Nvidia I would begin to look at to retest phase 4, but that still should be potentially a massive buying opportunity. But what we're seeing is this trend line got picked back up with 1, 2, 3, 4 weeks, 5 weeks closed back above it, and we're looking at it trying to push above this resistance. So it's looking to me like it's going to continue to trend up phase 4.5, right? Climbing. So what did you say to expected the price to double?
Yeah. So I got an interesting comment, right? So I said I'm expecting the price to double in the next 1.5 to 2 years, right? It could be next week too, right? And someone replies, way better things out there than a doubling in 3 years. Yes, there are better things out there that can do more than 2x in 3 years. The problem is 98% of those things you're going to be wrong on and they're going to lose you money. If it was so easy to double your money in 3 years, everybody would be a billionaire.
And what Tyler used to always say is the trend is your friend until the end of the trend, right? And so this is bullish, like ride it out.
Right. Right. Remember, the average person is sitting in a CD earning them 4% a year. So a doubling in 12 months is Ponzi scheme land.
Right, right. So if the price somehow holds this red weekly close trend line, which I am very surprised that Nvidia bounced after this close below. I'm very surprised by that, or even dropping this far below it. But if it just maintains weekly closes ish, it's going to walk up to double the price.
Right.
Let's see, where would it? What would be the timing of that?
Well, go to a monthly chart, turn on the MRI, and you get your timing, right? On a monthly chart, grab the MRI, turn that up, go to the last green star candle, and copy that path.
I don't have the MRI on this chart.
Huh.
Hold on, I'll add it. Because this isn't the same chart I was looking at.
Momentum reversal. You were there. Momentum reversal. There. Right, but now you got to turn on the stars.
All right, and I got to turn on the.
Yeah, you got to turn on the stars. So, trend. Yep, display numbers and trend change close condition is last candle. No, up. Trend change close condition.
Right there.
Nope, not that. Oh, you could. You can turn that on. No, right under it. Right under that check you just did. No, it's the none. No. It's on the stars.
Right.
Damn it. Right under the check mark you just did, there's none. Change that none. The word none. No, the upper one, the one above it, and above that. Right. Change that to first candle,
Okay.
and then the one under it, prior candle.
Prior candle.
Good.
Right.
Okay.
There you go.
Now, there it is. Okay. So now, do a copy, or maybe I should just do this on my end. But anyway, like basically everything that happened since the last green star candle, I'm expecting that, but not to a high of a percentage. So, and that's also your timing. So
Yeah.
I would do a copy function.
So
You know,
here,
a copy candle function?
oh, copy this candle.
No. You know what? Let me grab screen share.
I do it.
I'll show you.
I don't get that.
Be a lot easier. So here.
So this is a hyperwave that began in
Right.
2007.
So here's my monthly Nvidia, and the copy function is this one right here. So I copy all of these candles, and then I replace. Okay. So this is if the move is to repeat. Okay. And now I can go and grab one of these. And that's 138%. So obviously I'm expecting something smaller than that. I'm only expecting 100%, like that. And what's my timing? Well, if we match the last move, April of 2025 is my timing. So $250 by April 2025.
All right, and look at the 2 month chart, Tone, because that closes in a month. Well, that closes at the end of this month.
Yeah, I gotta get rid of these arrows, right? Because like the stock split, so a lot of my annotations don't make sense
The two,
anymore.
uh, the 2 month has,
The 2 month is gonna get a green star candle the moment we break to a new high.
and the MRI, the top came on the 2 month
Yeah, it did. Oh, the
MRI,
top came on a 1 month as well. So
1 month and 2 month.
yeah,
So yeah, so wait, when would the green star come on this on the 2 month?
it can come in a couple of days. As long once it breaks the prior candle's high, it will show up.
Oh, okay, got you.
Right? We gotta break 136.15 and the green star shows up.
And would you consider that correction on the candle prior big enough? I think I would, to actually trust that.
Well, I consider it. It's not the size, right? The size doesn't matter. I consider it again. There's time and price.
Huh.
What happens when uh, what happens when you hit an MRI? There is a percentage. Uh, I mean, these are completely independent things, right? MRI tells me the time. It doesn't tell me the price move, right? I'm looking for a 1 to 4 candle correction. Did it meet my criteria? Yes, it did.
Yes.
So from a time perspective, the MRI called it perfectly. We got a 1 to 4 candle correction. The MRI candle was correction candle number 1. The following candle was correction candle number 2. And now, by the time the current candle begins, I'm under full assumption that the 1 to 4 candle correction has completed because we're now on to the fourth candle, which is bullish with a green star. The moment next candle opens above $130, I'm not expecting any downside until the next MRI top.
Yeah. Nope.
So we're good. And I really like this Nvidia chart. Obviously, there was a beautiful top call back in December of 21. But while Mark was talking, I just like glanced at it back in the day. And this is the monthly chart. What was I looking at? Oh, I was looking at a weekly. If I go weekly historical, look at this ridiculous weekly MRI top back in 2008, literally marked the very top. And then the next time that price gets hit, this is that blue line, and look, this is as perfect as it gets. We have the next time it creates this double top versus the all-time high, it also happens on an MRI top, but this time it's a 1 to 4 candle correction, 3 candle correction, and goes to a massive breakout, and it's been going up ever since.
Yeah. When was that?
2016.
2016.
Yeah. Well,
Um,
it's also when Trump gets elected, right? So the markets were just on fire during those years. All right,
hey,
hey, Mark, we gotta go. I have I gotta get going. We gotta we gotta end the day here. So final closing thoughts. I mean, people keep asking about MSTR, but MSTR is just a Bitcoin proxy. MSTR looks great.
Yeah, looks fine.
MSTR looks so much more bullish than Bitcoin does right now, and I think it's a preview of what Bitcoin's gonna do.
That is possible. And so kind of to wrap up my thoughts real quick, Tone. Yeah, I've showed some bearish, a potentially bearish scenario, but it's still not overall bearish because Bitcoin is still in a bullish pattern of this wedge that's just taking forever. Super high probability of breaking out to the upside, like 80% probability of breaking to the upside, even with one more severe drop. And I still believe gold is leading Bitcoin, and taking a look at MSTR, I could buy into that theory as well, that it is also leading Bitcoin. So I'm still macro overall bullish, thinking that the top of this move is not anywhere close to being in.
I One last comment. I don't understand why people are expecting QE from the Fed. I don't understand why the Fed lowered the interest rate 50 basis points other than politics. And I don't understand why there's an expectation that the Fed is going to lower the interest rate again. QE is a mechanism to add liquidity. Look at this. They're really, okay, good. Oh, the percentage is flipped. Last time, see, right now, there is an 11% chance the Fed is not going to lower the rate. A week ago, there was 100% chance the Fed was going to lower the rate. This part was like 40%, and then this thing to the left, which no longer exists, was 60%, because people are retarded, okay? The Fed only creates QE when companies are collapsing, when the stock market is crashing, when a company is about to fire 50,000 people. Name me a company right now that is about on the verge of firing 50,000 people. If you cannot name a company that's on the verge of firing 50,000 people, and not because they're replacing them with high functioning AI, because the company is collapsing, right? Like, yes, Amazon should probably find a way to fire 50,000 people and replace them with robots. That's good for the company. That increases the value of the company's stock. Unless somebody can show me a company that is collapsing, like if Walmart is about to go out of business and 100,000 people are about to go unemployed, that's when the Fed steps in with QE, printing money to prevent job loss. That is not the environment we have right now. Why does anyone think that the Fed is going to suddenly inject liquidity into the market? For what purpose? Other than politics, but it still doesn't make sense to me.
Well, and with the unemployment, dropping or whatever, it's definitely not going up. It doesn't make any sense either, because that just creates a higher risk of rising inflation again, right?
Right.
Yeah.
So I don't understand why the Fed lowered the interest rate 50 basis points. That made no sense to me. And I don't understand why people are expecting the Fed to lower the interest rate again, especially the day after the election, right? Well, like what is the point? Uh, no matter what they do, for example, if Biden wins, then that's it. Why do you need to support the current administration with lowering the interest rate if your guys already won? And if Trump wins, Trump doesn't like Powell to begin with. What's the point of lowering the interest rate, just to piss off Trump more the day after he gets elected? It makes no sense at all. The Fed is not going to touch the interest rate unless the stock market crashes. Again, uh, I, the Fed will always tell you they don't look at the stock market, but that's ridiculous. The stock market is the number one factor of whether the Fed lowers or raises the interest rate, because when the stock market crashes, companies go out of business, people go unemployed, and the Fed has to prevent that. But if the stock market is at a new all-time high, why is it adding liquidity to the United States? I mean, like, contrary to popular belief, The Federal Reserve is not a conspiracy to bring the stock market to new highs. Its job is to prevent, companies from going out of business.
So, Tone, I know you need to go. I have one quick question for you, and can you just give me screen share for one quick second? And I just have a quick question, and we can wrap it up. It has to do with M2, and I'm curious to get your opinion on this. Am I sharing?
I think so.
Uh,
I see your screen. Let me make sure.
I don't see it yet on the
Hold
screen. Share.
on. Yep, we see it. We see it on live. Yep.
What I'm showing here is M2. So
Okay.
this was it's crazy to even consider a pattern, but this was an inverted head and shoulders. Like this is the money supply. So this is where the printers got turned off.
Right. And they started doing QT. They started, removing liquidity from the market because the market was rising.
Exactly. But here's the low, September 2023. And then here was a point of resistance, and we can see what happened. So my question, Tone, is how is, without actually officially being in QE outside of one rate cut, how is this money supply rising? Because I do think that this is contributing to the bullishness of the stock market, but I do not understand. I saw one video that explained it to me, and it was complicated, and I wish I bookmarked it, and I can't find it. It made perfect sense, but I actually do not understand how this M2 is rising like it is without any kind of significant QE. But clearly,
Okay, you want me to answer that real quick? What is Michael Saylor doing?
with he's buying Bitcoin,
With what?
debt,
Hmm?
debt
What is he buying Bitcoin with?
with dollars, with debt, with
Where is he getting the dollars?
uh, I don't know.
Well, the banks are generating the dollars for him, right? Based on his collateral, right?
Okay,
Remember, the Federal Reserve is not the only entity that has the license to create money out of thin air, right? Most money is created out of thin air from the banks themselves, right? The problem is that in time of fear, the banks are reluctant to create money for borrowers because they're afraid that the borrowers will not be able to pay back that money. And that's where the Fed steps up because the Fed doesn't have any fear of borrowers not paying back the Fed, right? Because the Fed doesn't work that way, right? It's a government entity. So in time of confidence, right, the banks will generate liquidity for those that want to generate liquidity in times of confidence. You don't need the Fed. So Michael Saylor is an example. He's not the only example, but it's an example of how the money supply is increasing because he is generating, he is having the banks create more money for him, and there's confidence to invest that money. Now, he happens to invest that money in Bitcoin, right? But the Fed doesn't have to add liquidity to the market when the market is adding liquidity itself. This is why this chart goes up and up and up and up, right? This chart always goes up and to the right. The only time this chart goes down and to the right is when the Federal Reserve stops adding liquidity to the market, but the private market doesn't yet have the confidence to add liquidity to itself. So this is a very, very low stretch where the Federal Reserve says, okay, enough liquidity, but the free market is not yet ready to generate it on its own.
great explanation, Tone. So I do think once we see QE eventually shift in, yeah, these highs are going to take out. It's going to go up and to the right.
Right, right. Because look when that chart spiked up and to the right in 2020, right? I mean, the banks are like no one has the confidence, right? So the Fed doesn't care. the Fed ejects the liquidity. But eventually the Fed says, okay, screw you guys. It's time for you to step up and create your own liquidity. But it takes a little while for the borrowers to have confidence to borrow money from the private sector and for the private sector to lend to the private sector.
Perfect. All right, that was a great explanation, Tom, and it makes sense. It makes a lot of sense. So I think that's it for today. I guess we kind of identified a 61.5K as kind of key support on higher time frames. So let's just see if that level can be held and hold our breath if it starts to flip into resistance.
Yep.
All right, excellent. We'll catch we'll catch up on the next time. See if we get that bearish cross and see what the price reaction is off of that.
All right, sounds good. You guys in Florida, stay safe. I'm getting the hell out of here tonight, and I'm going further south where there are no hurricanes.
My family is in Gainesville, and they got through the first hurricane okay. They're hunkering down. Hopefully, it hits south of them. My brother's house got decimated in Georgia after the first.
Oh.
It wasn't flooded. It was trees all over the town. They live in South Georgia, so they're hoping that the storm stays far away from them because they're barely starting to dig out of that mess that they were in. So yeah, stay
All right,
safe.
guys.
Safe.
Thank you so much for watching. Oh, you gotta turn off screen share. This is like weird. Oh, there it is. All right. Thank you all so much for watching, guys. Let's hope we stay like this. And I don't want to have to do a show with Mark next week like that. Bye,
Awesome.
guys.
Great seeing you.